Hey, hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and then we're going to be talking about economic data, how that impacts the overall markets with a little market analysis, maybe sprinkling a little geopolitical fodder, a lot of that to go around these days to round that analysis off, and then finally talk about some strategies we could implement into a portfolio based on those assumptions we come up with in this market analysis. All right, so across the pond, really, what's going on over there? Interest rates. First time in 11 years, they've increased interest rates out of the ECB, going from 0. Well, it was expected 25. They went at 50, so 25 basis points over expected. It was kind of a toss-up whether or not it was going to be a 50 or a 25. Not really surprising with the inflation we've been seeing going on around here in the United States and across the pond for that matter. One thing, though, that we did see across the pond in Europe was yesterday their consumer confidence just tanking to negative 27. Our crude oil inventories, we were talking about that, expected to be a build of 2 million barrels, came in at a drawdown of almost 500,000 barrels. So those numbers not really looking too good. The other thing we've been looking at is here in the United States, our manufacturing numbers, how have those been shaping up? Well, Philly Fed was supposed to come in at just slightly above water at 0.9. Was expected, came in at negative 12.3, so a big miss on that number. Then to beat that up even more, we got unemployment claims coming in higher than expected at 250,000, expected to be 240. We've been seeing that number do pretty well recently, but this number jacking back up and going to really cause some angst at the Fed, I think, with employment rising, manufacturing coming off. Yes, we are a service sector, but folks, this is not good to see. Now, tomorrow, we're going to even get better economic data. It's going to give us a better overall picture of the strength of the economy, and that comes in the form of PMI, which is Purchase Managers Index. We're going to be getting the flash estimates across the pond out of Europe. We'll get our own, but remember, we kind of put more credence in the ISM, which is the Institute for Supply Management data that we get here in the United States. So while it will be good for us to get a picture of our flash estimates, our ISM is a little bit more timely, if you will, for us. All right, so let's get on to the overall markets. We've got crude oil coming off just a little bit here this morning, which is good to see. We thought we might get a little blip to the upside with that drawdown in crude oil inventories, but today getting a confirmation of a topping pattern here. Anytime you get these dojis going back to back like this, that's a little bit more stronger. Remember, yesterday we talked about counter-opposing dojis. When you get these bottoming or topping patterns kind of inverted on one another, that creates a continuation pattern. But this is topping. I would say that the risk right now is to the downside, all right, in crude oil. Crude oil, again, we got, I don't know what's going on there. It looks like all my charts got shuffled somehow. Let's get on with the equities then. We'll just shoot from the hip here. We've got a continuation pattern. When we get this indecision, that isn't where we finish near the middle of these wicks. That is a real strong continuation pattern. Risk to the upside now here in E-mini S&Ps. We'll get a broader look at this. Bonds trying to find a little bit of a decision here. Again, we've got several indecision days here right in a row. Some people would say that this is a topping pattern, but hey, when it's in the middle of a move, folks, it doesn't count like that. And so this is a continuation. Bonds risk is to the downside here. NASDAQ getting back to this continuation pattern here, just kind of an indecision day, but risk still to the upside here in equities. Looking for a bit of a breakout going on here right now. So strength right now is to the upside here in the markets. I want to get some of the other ones. I don't know why my Bitcoin didn't show up. Bitcoin looking like a bit of a topping pattern. Now, if we're in that NVIDIA trade that we had talked about in the webinars, right? This would be that breakout moment. Look to try and take about 25% profit on that strategy. So we're probably right about there right now. Gold continuing to march its way to the downside. I'm looking at opportunities in this, folks. I think that gold has just got to make a turnaround here. It's just way too overdone to the downside. As a matter of fact, when we're looking at this as being a support, that used to be the Fibonacci we were looking at, but I probably should switch some of these around because we've got tweezer bottoms here. That's a really strong area to find some support here. So while my support level is a little bit lower, we can easily see. Let's see if I can just draw it in here. I'll just do a drawing real quick just to get a line in the sand here for you. Let's try and do this. It's going to be a little bit dirty, but we'll try and get it down there. So what? I guess I got to concentrate more. There we go. So we've got our double bottom here. So I think that's a pretty strong one. If this holds today, that will become solid. I'll probably change that color there for you folks. But looking for a breakout moment here. Volatility is relatively low in this market. So I might be looking at GLD, maybe buy some calls or something like that. It's all going to be dependent on where volatility is. Why do we watch volatility to determine our strategies? Well, watch the videos. We're doing webinars on that right now, cracking the code to trading options. So make sure you guys are subscribing and following along with those webinars I do on Thursdays after, 7 o'clock Eastern. So after the close in the evening, if you will, we'll be talking about some of these things that we need to be looking for before we determine what our strategy is. A lot of people come into the day and say, hey, I'm just going to buy calls in Apple and don't look at the volatility. That is a recipe for disaster, folks, and I try and help you avoid those types of scenarios in these videos, so please check those out. All right, that's about all I got for you guys. Oh, no, one other thing. I did get the IBM trade. That's why we had this chart up here. IBM, remember, I was looking to add a strategy in here because markets have just really been beat up recently. IBM likes to stay in a range. I've talked about that. It's done it for several years now, and I ended up selling those August 120 puts in there for $1.15. Okay, so with that sell-off, I was able to get those. You can probably get them right there right now. I think it was bid 105, bid at 116 or something like that last I saw overnight anyway. So still in the realm of possibility to be able to get those puts. And hey, folks, if you waited long enough, you might be able to get a better strike location than I did. But remember, I was selling those puts and volatility has continued to come out, which is exactly what I want from a strategy like this. Directionality might be against me, but if I can get this volatility to outpace the downward spiral in IBM, I can get out of my trade really quickly. And that's what we try to do to set ourselves up for success in these types of trades. If you can do it with cracking the code to trading options, you can be directionally wrong and still make money. That's how I like to do it. If you can't take that, take it easy. Bye for now.